Welcome to The Investor, a podcast where I, Joel Palafinkel, your host, dives deep into the minds of the world's most influential institutional investors. In each episode, we sit down with an investor to hear about their journeys and how global markets are driving capital allocation. So join us on this journey as we explore these insights. All right, well, excited to have my special guest today, Hasan Haider. He's a seasoned venture capitalist with over a decade of experience investing, supporting MENA's tech-enabled startups. He's the founder and managing partner of Plus VC. They're an early-stage venture capital firm that aims to back the best founders in the regions and the MENA diaspora, and just help them scale globally. And he's also a veteran in the accelerator space too. So, worked with a lot of high growth startups. So Hasan, excited to talk about your story of, breaking into the industry, getting into venture capital, and then eventually building your own firm. And also just learning more about what you're seeing in your region and the ecosystem. So excited to dive deep, and thanks for making time for us today.
Yeah, thanks for having me on. Glad to be here and shed some light on what's been happening in the MENA region.
Yeah, let's jump right into it. I mean, tell us a little bit about, your background, your career, and how you navigated to where you are now.
Sure. I think I got into this VC stuff by accident. I don't think that was a career path that I was considering when I first graduated. So initially started my career in banking, in private wealth a little bit, and then in asset management for a little while, but didn't really feel like I was doing anything useful in the world. I was moving numbers from one Excel sheet to another. Ended up launching my own startup. It was a bit like Netflix in the early days here in the region. We deliver movies to people's houses, pick them up. I had no idea what I was doing. Like this is 2007. There was very little online. There's no ecosystem here, no mentors, nothing like that. So it screwed up on a lot of stuff. And then at one point I met one of the business community here, and he started giving me sort of mentorship and advice. And I was like, well, this is pretty invaluable. I wish I had this in day one. And then as we were talking, he's like, what's preventing you from scaling into to be similar to these companies in Silicon Valley? I was like, well, we don't have these angel investors, we don't have venture capital. He's like, what's this angel investment thing? And then he explained, I was like, people like you who will support and help and guide, but also provide the funding needed to get started. And he's like, that sounds good. Let's work on that. So went from a startup to essentially launching one of the first angel investment groups in the region, in the MENA region, which was pretty cool. It became a case study. It was taught at Babson and at the World Bank. InfoDev used it as a case study how to build angel investment in emerging markets, which was quite cool. And this was 2010. So that was my first sort of experience investing in startups. And from there, ended up sort of figuring out, okay, there's all this deal flow that was starting to emerge across the rest of the MENA region. Like our mandate was Bahrain only, which is a tiny little market. I was seeing deals from Jordan, from Egypt, from the UAE, and I was like, okay, well, I want to do something with all of that. And so ended up going on a journey to try and learn a bit more about venture capital to Silicon Valley. That was an interesting experience. My first trip was my first meeting. I was wearing a full suit, and then the guy across the table from me, was wearing a t-shirt and jeans. I was like, okay, I'm definitely overdressed for this market. I really don't understand. So I started learning quite a bit, and then while there, I met the founder of 500 Startups, Dave McClure, and then ended up sort of joining forces to launch 500 in the region. So I became the managing partner for 500 Startups in MENA. Launched the first sort of international fund that was focused on the seed stage here in the region. And that fund's done pretty well. It was a 2017 vintage. We did 181 investments. We were the most active investor in the region by far, and really helped sort of kickstart a lot of the new startups that you're seeing start to emerge in MENA. Essentially, I've been the crazy person that believed in this market in this region before anyone really thought about, MENA wasn't even an afterthought. No one thought about Saudi or the UAE like in 13 years ago. And then from 500, we fully deployed that fund. It's done pretty well. We ended up deciding to launch Plus VC ourselves. We're kind of using the same playbook that we were running there.
Yeah.
So it's a broadly diversified portfolio at seed stage. It works really well for an emerging market like SARS. And yeah, that's how I ended up where I am, I guess.
Yeah, I mean, so I think double clicking on a couple points. I mean, I think it was really interesting to expand globally. So tell me kind of some of the learnings that you learned with, taking a franchise that's obviously well established and then, kind of hyper localizing them for the markets that you were. And was that in Saudi? Is that where you guys launched specifically?
Actually, so I'm based in Bahrain, and so that's kind of where we launched. It's a small market, but it has a really good sort of human capital base, and it's easy to get across the rest of the region. So we ended up really having a very regional focus from day one. We have team members on the ground in the UAE and Bahrain and Egypt and Saudi, which are the key markets, but also we're quite active in places like Qatar and Kuwait and Jordan and Morocco. So we had to localize quite a bit. The MENA region was very nascent in 2017 when we started investing. We didn't even have like a first generation of entrepreneurs that had big exits yet. It was really sort of the first gen that we were sort of supporting and getting started. So there were things that were common knowledge in Silicon Valley that just weren't really things that were expected or understood here, like growth hacking, growth marketing. Data driven growth wasn't really a thing, and so we had to sort of bring that understanding into the region. We had to sort of mobilize capital around us as well, because there was very little investment activity then. There's a handful of funds. There was no real LP activity at the time. So we really were trying to build really a whole funding ecosystem from scratch alongside us, because just us by ourselves just wouldn't work as a single firm.
Yeah, no, that's helpful. And what specifically did you guys use as a strategy to kind of build that community there? Sounds like there was already a tech ecosystem there. Were there already at that time like the other large accelerators like Techstars and Y Combinator, or were you guys one of the first?
No,
there
was no one in the region. Like we really were the first. Like it was kind of very virgin territory in the region. So
that's amazing. So how what tell me about the first cohort. Like, I mean, how did that feel kind of getting that first cohort stood up? Like, did you guys do like a 3-month cohort and then like a demo day at the end?
Actually, so the first thing that we did is we were like, look, we're going to be investing first and foremost. So it wasn't linked directly to a program. So we started investing active checks. At the time, seed rounds were maybe $200,000-$300,000 in total. Average valuations were $1 to $3 million. Like that was what we were investing in. And there was just very little capital available. So just being an investor was enough to catalyze a lot of activity. And then, as I mentioned, like one of the areas where we found was lacking was just an understanding of growth and how to scale and how to build sort of that. So instead of running a full accelerator program, we ended up with our partners in the QSTP running a very we called it Dojo program. It was a growth focused program. It was a 1 month, super intensive, just trying to figure out how to scale and grow these businesses with knowledge that's pretty successful and works quite well in Silicon Valley, and can we apply that to the region? So we flew in mentors from the Bay Area and ran it for a month, and that was actually pretty good. We saw massive transformation in the way that the founders were thinking, the way that the companies were being tracked for growth, what their targets were. They started to become a lot more data driven than they were prior to that, and so it wasn't a full accelerator program. We didn't start doing that until probably 2 years in. But it was really trying to bridge a bit of a knowledge gap there.
Sure. That's really interesting. So yeah, I didn't know that you guys started with kind of just actively investing. So that just obviously built a lot of awareness because they're like, wow, there's some type of capital provider,
Yeah.
if not the only one. I mean, who were the other? Was there an angel ecosystem there at all? Like,
I
was there
mean,
like, smaller high net worth individuals that are backing
not
startups? Like, what
really.
was? Okay,
So,
wow, okay,
so the thing is, when you go to the larger, like the people that have money in the region, were
yeah,
mostly large family offices that were made their wealth either trading or real estate or construction or industry, right? So we didn't have people that had created wealth in technology or startups or anything like that before. So we didn't have that cycle of angel investors yet. And as an asset class, it would just look so weird compared to what these people what the families were used to investing in. They're like,
hmm,
this angel investment thing, like, wait, I'm putting all the money in, but I'm only taking a small stake. Like, that was like the opposite of what they were doing before.
yeah.
Like
So they
they
were
put all
thinking
the
about
money
almost
in.
like the buyout model, where it's like, hey, if I'm giving you 20K, I better own like 50% of the company or something like that.
Basically, yeah, they
Yeah.
were investing like $200,000, taking 80-90% of the
Wow,
company,
that's crazy.
and so it was a whole like
But what
learning
were the
curve.
sizes of these companies though? Like, were they, what was the revenue levels of these companies? You put in $200,000 into a company, and you're getting, 80%. I mean, are these, how big are these? Like super
They
pre-seed
were they were they
companies?
were small. Like the thing is, the startups at the time were tiny. Like
Yeah.
they were scratching 5K a month
Hmm.
and revenues, things like that. So it was really
Yeah.
nascent, and I guess it's kind of made sense for the time, but
Hmm.
the market evolved quite quickly after we
Yeah.
started investing from more of a Silicon Valley mindset in 2017. The market started to pick up. We started to see some large exits as well.
Hmm.
So there was an exit of Talabat to Delivery Hero for $200 million. That triggered a lot of interest, and then Souk.com got acquired by Amazon for like $700 million, I think it was. And then Kareem got acquired by Uber for about $3 billion. So it started to avalanche that, hey, this people can actually start making money. And a lot of the like, there was a random activity of angels, and a lot of the ones that did put in small checks into some of these deals, their friends were like, wow, that's amazing, like you made so much money, like how do I do that? Let me get involved with that. And so in probably around 2020, we started to see a lot more activity from the angel, sort of the high
Hmm.
net worth individuals started
Yeah.
to build, to started to feel like, okay, this is somewhere that we can actually invest and make money, and let's
Sure.
do this more.
And then when did you guys ever end up doing programming in the future?
Yeah, so we did start running accelerator programs. I think in 2019, I think is when we
Yeah.
started doing it. So it was
Okay.
well past the thing, but
Yeah.
honestly, like accelerators, I didn't think the investment model behind an accelerator here in the region made a lot of sense. Like
Sure.
there wasn't a large pool of applications every single batch, so you had like a pent up demand for the first batch, and the second batch there weren't a lot of companies that were emerging, and a third batch even less. So
Hmm.
it just didn't make a lot of sense as an accelerator program. So that's why,
Yeah.
like, at Plus, we're like, look, our investment decision making is really driven by really think these are great founders. We want to back the best founders in the region. The accelerator thing doesn't really matter to us. We just want to really back them early and make sure that
Hmm.
we can invest in these founders regardless.
Yeah.
Um, because sometimes the selection process for an accelerator program not always the best.
Sure.
You're
I mean,
looking at
what makes because a lot of times accelerators, I mean, and this would be interesting too, to learn kind of like what is the decision making criteria with, when you got 1,000, startups. I'm kind of familiar with the process of some of them where you got to, submit a founder video, which is like a minute. And then when you're applying, it's like a minute, right? Of like a kind of a summary of like who you are, what your product is doing. So, how do you sift through all that noise to pick a candidate, and what makes a DNA of like an accelerator candidate to
Yeah,
go through the
I
program?
think probably one of the issues that we were facing is that there's always a pressure to have a batch, especially if we have
Mhm.
an external party that sort
Yeah.
of funding that program,
Mhm.
you have to have a batch of 15, 20 companies every 6 months or so. But in the region, we were only seeing probably 300 to 400 applications at a time. And
Mhm.
so we ended up like we had to select like the 5% out of the applications each time, and they weren't necessarily the best deals. Like it wasn't,
Yeah.
um there's other considerations when you're in an accelerator program, which is not necessarily driven by can I invest in the best deals that generate the best returns. And how do you select companies for the accelerator? The best ones you select the way that you would from a financial perspective. Like you're looking for what I look for when I'm looking at a deal at the early stages is I'm looking for founders that have a bias towards execution. They just want to get things done. They're going to get things done whether we support them or not. So we might as well be there as part of the
Mhm.
journey. And
Yeah.
so that's really what we're focused on. Like we were looking for founders that, regardless of what happens, whatever life throws their way, especially in a market like ours, they're just going to keep hustling to get things done and
Mhm.
keep executing to get things done. And that, I guess it's hard to figure that out, but I've reviewed tens of thousands of deals now over the past few years, invested in like 230 of them. I've seen quite a lot, so the pattern recognition has become a bit better. I think that's
Mhm.
what's working quite well.
Yeah.
But
No, it's exciting. And I've talked to a lot of founders. I mean, there was a founder recently that I spoke to that, I recommended them to go to a consumer focused accelerator. And,
mm,
it's tough to raise money. It's a lonely road doing it on your own. It's easier, right? Because you can just kind of, you're like, why do I need to burn 3 months kind of like getting education and support? But sometimes kind of being in that cohort, there is a network of investors that maybe you didn't know before, maybe a founder knows somebody else. So sometimes kind of cascading your network, and then also just having a support system definitely helps. But it takes more time and it's definitely more overhead, with that consideration. So I've had founders tell me, hey, you know what? I just don't have time for an accelerator. I don't got time to like show up to these sessions and follow all these different milestones that I have to go through. So those are kind of the two perspectives that I hear. But like, what are you hearing? I guess from the investor side, and obviously there's a lot of labor to run the cohort, right? You're
yeah,
gonna hire a program manager. There's
Mhm.
probably a budget you need to like host events. So talk to me about that. Just both sides of the table, for both the founders and just kind of running the cohort.
I think it really depends on the founder. Some founders
Hmm.
really would benefit from going through an accelerator, just
Yeah.
to sort of get them in the right mindset of
Hmm.
thinking about growth, thinking about execution, thinking about how to really pitch their company, how to raise money from investors, all of that. So some founders, it would actually be pretty useful for them to go just to get a bit more polished and really understand and build out a network. But some founders honestly don't need it. Like it's
Hmm.
they're executing regardless. They take feedback when they're given. They learn as much as they possibly can from every interaction that they have.
Sure.
They surround themselves with good people, and so accelerators aren't for all. Like it makes
Hmm.
sense for some founders, but it makes
Yeah.
absolutely no sense for some others. From an investor perspective, the thing to be careful of is I've been at the back, so I've seen how the sausage is made. Demo day is not really the best you know eh, way to see which companies are actually worth investing in or not.
Hmm.
I've seen some of the worst companies that we invested in go up on demo day and shine so brightly, and every investor's like, "That was the best company in your batch." I was like, "It really
Yeah.
wasn't." So,
Yeah. I
uh,
mean, I think there's a difference between being a good presenter and having a stage presence and really having like a great product demo.
yeah,
And then maybe not being as in the limelight, but like just having a great business, right? That's
yeah,
generating recurring cash flow.
yeah. That's what
And
we
I mean,
like.
two examples are like Steve Jobs and Elon Musk. I mean,
Yeah,
they're one of their skill sets that they're both really good at is like product demonstrations and the showmanship. Obviously, they both built amazing businesses too, but if you can do both, that's always great. I mean, what made some of these companies suck? Was it just like
they
what were
just
some of the
wouldn't.
attributes?
They just wouldn't get anything done. Like you go
Hmm.
talk to them one week and be like, "Hey, listen, what are you working on this week?" And be like, "Oh, we're gonna execute this, this, and
Hmm.
this." And you come a
Yeah.
week later and they've basically done nothing, and
Sure.
that's it. Like, um, that's honestly all we're looking for at the early stages.
Hmm.
Is we're looking for founders that are getting things done day in day out. They're like swimming. They're continuing to sort of survive and just
Hmm.
executing on things. So
Yeah.
it's just that is it's pretty simple. Just are you doing anything or not?
Hmm.
And is it generally in the right direction, like, or
Yeah.
not? So that's really it.
Sure. And like, what about the differences that you saw from, like, the Western founders to the Middle East? I mean, what industries did they specifically focus on? Were there, kind of trends that you've seen that were kind of unique to the market?
I think what we're seeing in the region is sort of the first gen of startups. So, like,
Hmm.
unlike in the US, where you're kind of looking at niches of niches or whatever the newest thing is, or super specialized sort of funds. In the Middle East, a lot of the big opportunities still haven't been sort of taken. And
Yeah.
so things within e-commerce, within payments, within logistics, just transacting online, there's
Hmm.
huge opportunities in those spaces. So
Yeah.
so we're still at that first gen of seeing what can be done and getting transactions to move online. And then the second gen that we're starting to see emerge really in the MENA region was a lot of fintech plays over the past couple of years. There was a big focus on startups that were enabling various types of debt, payments, whatever. And so fintech started to take a bit of prominence because the banking system here really wasn't structured in a way to
Hmm.
support a lot of really small companies and stuff.
Yeah.
And then the phase we're at in some of the markets now is we're finally getting to the point where we're seeing great SaaS businesses being built that are local to local, that are built with Arabic localization in mind, that are really competing on a global scale with product, but really trying to dominate the MENA region, which is honestly a big enough market. It's 350 million people. It's a large GDP. It's as big as the US in terms of population. So we're starting to see that sort of phase. We're not seeing a lot of deep tech. We're not seeing a lot of companies that need hardware or biotech or anything like that. Still, I think the phase that's coming, but we still have so many opportunities, just sort of the base layer in
Yeah.
the region,
Hmm.
that it's like you don't have to go digging for gold. It's just available, and you just
Yeah.
got to pick it up from the ground. So
Hmm.
um, that's how we're seeing things here. And so the founders, the other thing is the founders are usually like first gen founders. They don't have networks. They're really just getting started. And these are the guys that are going to start building the foundations for the next generations. They'll be the angel investors. They'll build the ecosystems. But right now they're not, it's not like Silicon Valley where, oh, I don't talk to any founders unless they come through a referral from someone I know and trust, because
Hmm.
they don't have access to those networks yet. And so
Yeah.
we're starting to build those networks within the companies that we're investing in.
Yeah, it's helpful. And then where do you kind of see the typical outcomes in those regions? Are they IPOing? Are they doing, how do you guys feel it's best to get liquidity, like kind of the exit? So for me, for example, like I've looked at a handful of deals, in Africa and India, and sometimes there's attractive opportunities in secondaries,
Yeah,
especially if you don't really understand like the stock market in those areas, figuring out how those shares transfer back, and then there's probably forex fees as well. So what's the ideal outcome for like the investors that are in that space? Is it cash? Is it cash and equity, all of the above? Are they looking for, are there SPACs? I guess, what are some of the different exit opportunities that you've seen?
sure. I mean, we're seed stage investors, so our
Hmm.
exit is much easier than some of the later stage funds.
Yeah.
We're investing at valuations between 5 to 10
Hmm.
million post. So by the time a startup gets to Series B in the region, which is usually around a
Hmm.
$200 million valuation, we're already doing pretty well on those investments.
Yeah.
And at Series B in the region, there's usually quite an active secondaries market where
Sure.
the later stage investors want to
Hmm.
acquire as much ownership from the early
Yeah.
stage uh, VCs like us. And so we've been able to liquidate some positions. one at 31x cash on cash through secondaries, another one 17x cash on cash. So secondaries, I actually believe for us as a seed stage investor,
Hmm.
is probably one of the great sort of exit paths in an
Yeah,
emerging market like ours.
I totally agree.
We don't need to hold on all the way to IPO. But
Hmm.
what has changed over the past probably 2 years, I guess, is that the IPO path has opened up in the region. That it never existed. Like
Yeah.
if you spoke to me like 3 years ago, I'd be like, there's
Hmm.
no chance in hell that any of my startups are ever gonna IPO. And then we actually had sort of a couple of landmark transactions. So there was
Hmm.
Fowry out of Egypt IPO'd. It was a great transaction. And then Jahez in Saudi IPO'd on the new sort of parallel market that they have in the Saudi market. And that was just a killer transaction that people were like, oh my God, this is crazy. And so
Yeah.
it was a $2.4 billion valuation at exit, like at the
Hmm.
IPO, and people made a killing. So essentially, that has actually now become a pretty valid path. From our previous portfolio, we probably have 5 or 6 companies that within the next year or two are actually going to IPO either in the UAE markets or in Saudi. And it looks like a really viable opportunity. But
Hmm.
I'm not someone that's like, oh, I'm going to invest because I think all of them are going to IPO. I was like,
Sure.
oh,
Yeah.
this is a nice
Well,
thing that I had
my
no clue
question
was
too,
going to happen.
so I guess to double click on my question, why exit at the B instead of maybe waiting till like Series D? And I guess maybe part of that could be the graduation rate. So like how do the graduation rates in the MENA region kind of compare to the US? Are you looking at, like how long does it take to get to the Series B, compared to the US markets?
Yeah, I mean, again, it's like a nascent market, right? So
Yeah.
everything is just really we're figuring things out
Hmm.
for the first time for a lot of
Yeah.
these deals. And so, when I got a deal that was, for 30x, I thought was pretty good. So it's like
Yeah.
I'll take some profit off
Totally.
the table.
Yeah.
I thought it was okay. And so
And it's also just a great way to just, as you're building that relationship with LPs to kind of just show that, hey, I'm delivering
yeah,
some returns to you and hopefully show some DPI essentially,
yeah,
right?
exactly. So
Yeah.
that was the thesis there, and we didn't sell all of it. We sold a
Hmm.
portion, and we'll sell a portion on the way up. But the
Yeah.
problem is that the IPO, like, there isn't a lot of capital available at Series C and D in the region. We don't have a big private market that'll keep a
Hmm.
company going all the way to like
Yeah.
multi-billion-dollar valuations. There just isn't that much capital. We started
Interesting.
to see some international capital coming into the
Hmm.
region at Series B and C prior to the collapse and everything went to hell in 22,
Yeah.
and so everyone retrenched out of emerging frontier markets like the MENA region. So I don't think we have that capital availability and that depth in the capital markets to
Hmm.
be able to stay private past a certain stage.
That's
And so I
interesting.
think we're starting to see, I guess, a lot of these startups are probably going to be at $1 billion, $1.5 billion ish valuations at exit
Hmm.
at the IPO stage, and past that stage, there isn't private capital that will keep them
Yeah.
private past the $1 billion mark. We just don't have that. It's interesting. You're like, oh, the MENA region has so much money, Saudi, UAE, whatever, but
Yeah.
actually, it's not being invested in our markets, and it's not being
Yeah.
invested in the venture capital space.
Hmm.
So
Yeah. I
there's
mean,
really
I'll
no
say,
real capital.
yeah, I mean, and one other thing is, keep in mind in the US, a lot of these large late stage investors are like, debt providers, right? So they're
Yeah.
massive banks that are providing massive, private credit opportunities. They're providing, mezzanine debt.
Yeah.
So that's a huge part of the ecosystem here, the option to have debt and equity. And, I don't know, this might be a little provocative in the Middle Eastern culture, but I know like some cultures, some areas of the Middle East, like they don't, I guess it's not allowed to have interest bearing products, from my
Yeah,
understanding. But
but
is that the
there's
same?
there's always other structures like it
Okay.
exists.
Yeah, sure. Okay. So can you, talk about that? So like, what are some other structures that
No,
could
it's
be maybe
basically,
debt focused?
so there's a bunch of ways that are actually, so debt is fine. Like a lot of
Hmm.
companies do take conventional
Yeah.
debt from
Okay.
banks and stuff. So
Yeah.
it's not like a complete taboo, but if
Hmm.
you have a personal preference or your investors have a personal preference against
Yeah.
that, Then there's sukuk, which are similar to bonds.
Hmm.
There's invoice financing structures. There's fee-based structures, which are not, it's not interest, but it's a fee that you pay.
Oh, sure.
So
Okay.
there's a lot of stuff that
Yeah.
you can get, debt products that
Got
are
it.
compliant. It's not
Okay. Yeah.
it's not impossible. It's like it's there. Like
Yeah,
it's
so there's ways around it. Okay, so that's because I was just curious because I mean there could be some. I don't know if it's evolved now to have like more private equity firms come in that can offer some of those products to just give them some additional capital to scale and get to the next round.
we've started to see private equity players come down into sort of the tech space, but
Hmm.
they really don't understand it too well. Like a lot of the
Yeah.
private equity guys in the region have been either investing globally, middle market sort of US deals and stuff. So them understanding the region has been a little
Hmm.
difficult. And then,
Yeah.
or they're just, the startups are just not big enough or attractive enough for them to really like even pay attention.
Yeah.
But we started to see players like Investcorp, like Jedwa Capital, a few of these local players started to pay attention to startups, even Al Jazeera Capital out of Saudi. And so it's something that's emerging. So we're starting to see the Series C-ish and D-ish pools of capital come from more traditional sort of private equity players. But they all have, we'll IPO this within a year or two, and we'll take
Hmm.
advantage of these ridiculous valuations that we're seeing in the local market. So that's kind of the mindset that we're seeing come in at private equity. But at early stages, like they don't get what we're talking about like at all. Like the private equity guys.
Yeah.
Um,
No, understood. No, that's helpful. And then what are some what are some sectors that you see are emerging? I know in the Middle East, you talked about investments not going into venture. Where are you seeing the investments mainly prioritized? I mean, I see a lot of stuff in the Middle East focusing on, clean energy, hydrogen energy, impactful investments. So is that what you're seeing? And, like, I guess maybe you could talk about where the money is getting diverted to, and where do you see some of the startups evolving in to kind of maybe be aligned with that.
I hate it when a startup aligns for where the money is available. Like it's like
Hmm.
you should be doing what you believe in and executing
Sure.
on that, not just fixing yourself to be able
Hmm.
to raise whatever money is out there.
Yeah.
We have seen a bunch of pools of like green energy and stuff start to
Hmm.
emerge.
Yeah.
We're seeing
Well, I
pools
guess
of
the only comment to that would be like, I guess maybe not around the money, but like I guess if you're building the product around maybe the market, like the customer, right? So I mean, if there, I've seen a lot of like mobility type of companies, kind of emerge in those areas because maybe that solution wasn't there.
yeah.
But that's a good point. Yeah, I mean, I think if if there isn't any financing that's available, I guess that could be something to think about.
No, I think like the region is still so nascent.
Hmm.
The total amount of venture capital that went into the whole of the MENA region last year was like less than $2 billion, I think.
Sure.
So it's a tiny, tiny amount of capital that's
Yeah.
coming into the MENA venture space, but
Mhm.
it's such an amazing opportunity that's actually being overlooked by a lot of the local players because they're just like, oh no, I'm fine. I'll just buy a real estate thing and I'll be fine with my building and the returns
Yeah.
there. Just do a factory and I'll be fine doing that. So it's like
Hmm.
there's not a large, we don't have institutional pools of capital like endowments. We don't
Hmm.
have LPs, even VC funds. The first gen VC funds were all 20-30 million dollar funds,
Yep.
and as it started to grow, they outgrew the availability of LP capital. Like there isn't
Hmm.
enough capital in the region to get a fund to a 200-300 million dollar fund vehicle focused on the region with capital from the region, which is
Yeah.
quite an interesting issue. Like it's
Hmm.
pretty cool to see that.
Yeah. No, it's really cool. Well, Hassan, I really appreciate you taking the time out to share all this insight. I mean, I think a lot of us, really appreciate just kind of knowing about that region, the origination of how the ecosystem developed, and it was really great just learning more about your journey into this space, which is often opaque. So it's helpful to kind of unlock that and just allow people to know more about it. So appreciate you doing
Of
that.
course.
Yeah.
Thank you so much for having me on. I think the region's super interesting. I've spent 13 years of my life
Hmm.
investing in startups here, and I think there wouldn't be any other market that I'd be interested in investing in other than here, honestly.
Yeah, absolutely. Well, thanks so much, Hassan, and looking forward to catching up soon.
Thank you so much.
All
Take
right.
care.
Take
See
care.
ya.
Bye.
Bye.